Hello friends, this is Sandeep Sharma. I'm again with your new presentation related to GST, which talks about impact of Section 49A on cash flow. Friend, you must know that this section is applicable from 1st February 2019, and we need to see our business processes and impact on cash flow. Cash flow, which is a backbone of any business, and everybody need a good cash flow to run their businesses. Now, this example for them. Let's just start. To understand this, I have set one example here. What I assume that let's suppose goods purchased from outside the state was for rupees 1 lakh. On that GST was of 18%. Then we have input GST, IGST 18,000. Again, we have also purchased within a state, that is from inside a state, of rupees 1 lakh, and accordingly GST, CGST and SGST was of 9% each. So input was of 9,000 each on account of CGST and SGST. Apart from that, we also assume that since we have purchased a goods of rupees 2 lakh, we are selling it at a 10% of margin. That means we are selling it at 2 lakh 20,000, and on which we are also paying GST at 18%. Since we are selling within the state, then we have to pay CGST and SGST, and it will be 9% each, and accordingly our output tax liability will be 19,800. In our next slide, till 31st January 2019, if you see the calculation, our total output tax was of 19,800, from which we have first adjusted CGST input, which was of 9,000 only, and the balance was adjusted through IGST input. Again, if you go to the changes which Section 49 brings into from 1st February 2019, our total output will be 19,800. We'll reduce GST. First, first we'll reduce IGST input, which was there in the provision. So IGST input was of 18,000. We'll first adjust full IGST amount from the output tax. The balance liability will be of 1,800, which will be further adjusted through CGST input. Now, by doing so, we have a CGST input remaining of around 7,200, which was not in the earlier case. Earlier case, by meaning here, till 31st January 2019. In earlier case, we had a IGST input of 7,200, and now in this case, we have a CGST input of 7,200. Now, for further to calculate, we'll also going to see the SGST liability calculation. For this, total output was 19,800. We'll reduce SGST here, 9,000. Balance will be 10,800. Accordingly, we'll reduce also IGST input, that was of 7,800. Because in last sheet, we had a balance of IGST which was of 7,200 only. We'll pay the 7,200 here through IGST account, and balance 3,600 will be through cash ledger. Cash ledger, as you all of you know, that we have to first pay through challan, and accordingly, once challan amount reflected in cash ledger, we need to adjust that amount through cash ledger. That is called electronic cash ledger. Now, if you go to that, if you see the impact after 1st February 2019 and the output tax liability, Our output tax SGST liability is 19,800. Since we have already adjusted IGST amount earlier, if you see the last example, CGST calculation, we don't have any IGST input. The IGST input will be 0. The total liability will be 19,800. Here what we going to do, we reduce SGST input liability, which is 9,000 only. Then the balance is 10,800, which we need to pay through cash ledger. Accordingly, after doing all calculation, if you see the summary of this, till 31st January 2019, we had IGST input nil, SGST input nil, and CGST input nil. But we were only paying 3,600 through cash ledger. That means burden or cash flow was only 3,600. But after 1st February 2019, if you see the crux of this example, IGST input will be nil, SGST input will be nil, but CGST input will remain with us of 7,200. And again, due to this, we have to pay extra through our cash ledger by paying extra to the government through electronic cash ledger. Here we are paying 10,800. That means we are paying 7,200 excess. Friends, we should be very careful. We need to review our business model. If you see the impact, total impact, a load of cash flow will increase, and accordingly, what is the way? If you ask us, or if you visualize, if you think through it, then you have a two way of mitigating this risk. First, either increase your sales to outside state, or second, decrease purchase from inside state. Friends, we hope so that you are going to like this presentation. Please do post your remark. Waiting for your remark and comments. Thank you so much.